Hi everyone, it's Kwaha here, and today I'm gonna talk about refinancing. So over the years, I have many clients who ask me like, "Oh, what's a refinancing, and what's a good time to refinance? Why you need to refinance, and what kind of costs include in the refinance?" So today I'm gonna make a video about refinancing. So first of all, if you go into Wikipedia, the definition of a refinance is refinancing is a replacement of an existing debt obligation with another debt obligation under a different term and interest rate. The term and condition of a refinancing may vary widely by county, province, or state based on several economic factors such as inherent risk, projected risk, political stability of the nation, currency stability, banking regulation, borrower credit worthiness, and credit rating of a nation. In many industrialized nations, common form of refinancing including primary residence mortgage and car. So today we're talking about the primary mortgage refinance. So um, within the last year, 2024, if you're in the market and you like kind of like follow the trend, you notice that the mortgage rate has been going up and down a lot, like a roller coaster. So we start the year out with like an average rate of like a 6.6, and then it shot up all the way to like over 7% in May, and it did drop a bit, but then only up until the end of October, and then it's already jumped back up already. So I have one of my mortgage a while back was at a seven, I believe a 7.75%. So during this time, I will had an opportunity to refinance. So I took a chance and looked into the calculation of the refinance and see if it worked or not. And it turned out that it did work. So original my original loan payment or payment. Um, Let me see. So my original loan payment was Let me see if I can bring it up. Uh, was Okay. So let's say home value. I'm just gonna put like 705. Original loan was 705, and I have a 7.75% over 30 years. So just don't calculate here because usually I do property tax and kind of like insurance on the side. I don't include in my mortgage payment calculation. So to make things simpler, I just gotta use raw data, not raw number. So the mortgage I got on the property was $507,000 at a 7.75 rate. So as you can see here, my monthly mortgage was $3,632.21, right? So during the month of November, the rate was still low. I mean during the month of November, the rate was still low. So I spoke with my loan officer and decided that maybe it worth a while to do a refinance. So at that time, the rate was like around, I believe was like for my property was like 6.5%. So I did a calculation for a 6.5% rate and see if it's worth it or not. So my original loan was like I mean my mortgage balance was like around $502,000. So let's calculate that at a 6.5%, and then we'll see. Again, put everything zero because it's easier to compare like apple to apples. So let's calculate that. So at 502,000 with a rate of 6.5% over 30 years, the mortgage payment becomes $3,172.98. So if you compare this to the original $3,600, you see that if I do a refinance at a 6.5%, then the cost the month I could save like roughly $4 a month. So that's the reason why I did the refinance. So I did the refinance and worked with my loan officer to generate the refinance. And in the refinance, when you go through a refinance, there's also some costs involved. So when you spoke with the loan officer, make sure that those costs are included in your refinance so that even if you're even if you refinance with those costs, it actually makes sense. Because when you do a refinance, you can't just look at one angle as like, let's say, oh, an interest rate drop, so I just go ahead and do refinance. There might be some charge on top of it, which is like the lender charge. So there's sometimes they might charge you a couple of points to do a refinance, and those can come in like thousands of dollars. So when you do a refinance, if you want to compare something similar, in addition to the interest rate, you ask the lender to loop in the cost too. So let's say if you are doing a let's say I got a six my original mortgage was like a 7.75, rate is like 6.5, but then on top of that I got like a $10,000 cost to do a refinance because there's a lot of charges like escrow, title, and all that stuff. And on top of that, there is kind of like a lender charge. So you have to ask the loan officer to calculate that in and say, oh, how much I need to borrow instead of just the original, like how much it's on the balance. So for example, let's say in this example, let's say my cost, including everything, was like $10,000. So if I add in $10,000 and said, oh, instead of borrowing the lender, the 502,000, which is the balance, I'll borrow them like 512, which is including the $10,000 for all the charges, and calculate that based on the rate of 6.5. How much will that cost? So even at that calculation, as you can see, it's only jumped to like $3,236. So it's still way lower than my original payment. That's why I want to go ahead and do a refinance. And what included in the refinance? So I got the statement, like the closing statement from the escrow. Here's the closing statement from the escrow. So instead of doing a borrowing like a 502, which is the loan balance, I went ahead and increased my balance from a from the 502 to a 514 because I want to use some of the extra money to pay off all the costs. So in here, as you can see, escrow will give you information. This one, I think I didn't get the final one yet, so they forgot to add in like two item on here, which is like the lender charge and the prorated interest on the payment that I have to pay it off. So there's two item here that cost like around $2,000 that they forgot to include in here, which at the paper that when I signed the final paper it was there, but just make note of that. So there's an extra $2,000 charges here. Other than that, they do charge you like title, the lender title, which is like around 635. Lender settlement agent's fee, which is like 635. This is the escrow fee, so you have to pay escrow 650 for doing the paperwork for you, and then the title, the fidelity title, national title, $9, wire fee, 125, notary fee, $200, endorsement, uh, $75, title recording, $23, right? In addition to that, you have a government recording with charge, which is 225, and then as you can see, pay off 506. Even though my previous balance was only 502, but because I paid it off, I have to pay the extra interest plus the mortgage, which is like the 1 month mortgage, so it became 506, right? And then because I can't cash out any money at this point because my loan officer said if I cash out, then it's above the 40% threshold, and there's gonna be extra charges, and I don't want those extra charges. So I didn't ask for cash out, but when I do a refinance, I can use some, I can borrow some of the money to pay off the property tax. So I go ahead and did that. That's why it added up to like 512,000, with the balance and all the costs, and that's the reason why I rolled up to 514. And with the 2,000 that missed from the year, it was supposed to be I end up paying like only $850 to do a whole refinance. But as you can see, my total loan was 514, right? So if I do a calculate 514 is 6.5%, my new monthly mortgage is only $3,248.83. So that in itself, let's do a quick math here, minus here. Now I pay like so I save $383.38. So like as you can see, like even though the other mortgage that I paid, I already paid for a year. So when I do refinance, I have to restart it and pay another 30 years. But still, I'm gaining like my cash flow improved by $383.38 per month. So now the thing is like if you look at it like on the longer term, you can see that for the original loan, which is at 507 at 7.75%, I'm paying, for the life of the loan, which is the whole 30 years, total interest I had to pay is like 800,000, right? But with the new mortgage, the total interest I had to pay is only 650. So if you're looking at the whole life of the loan and you do the calculation, 655, so 800,000 minus 655, I save around $145,000 in interest alone. So the refinance, just by dropping the rate from a 7.75 to a 6.5, I save 140 or around $150,000 for the life of the loan. So because of that, that's why I went ahead and do a refinance. So when you see interest rate going down and then you're thinking about doing refinance, you should go through this whole process of like calculating, how much it's gonna, how much your payment is gonna be, how much you save per month, and see, in total, are you saving or not? So like I said, sometime like let's say, if I have if my mortgage is 5.07, but the rate is like at 7%, right? And then instead of just instead of the regular cash out, I went to a lender and they said, oh, they give me a 7%, but then they have a $20,000 charge on top of it. So let's say you're changing it to like 507, right? But instead of that, you're adding like a $20,000 on top of here, right? And then you do a quick calculation. Is that still worth it for you to do a refinance? It's still kind of worth it, but if you subtract out the $30,000 in interest you pay for the first month of my original mortgage already, then the gain is not even that much, and you have to go through all the inconvenience, have to do a refinance on it. So sometimes it's good to wait a bit, and then the rule of thumb is like when the rate went down like around 1%, then you go ahead and you look into if it's worth it to do a refinance or not. But make sure that you account for all the cost, all the fees too, the lender charges, and asking them to loop in the charges. Like let's say you refinance with the charges, so that the lender, you use the charge, all the charges to pay off I mean the new loan to pay off the charges too, and that's how you calculate the refinance to see if it's worth it or not. And the other thing is, when you like, let's say, I don't think you have to be careful of is I don't be tempted to buy down point. I never did it myself because I hate to buy down point because I'm like, the reason for that is because let's say the rate right now, let's say the rate is like 7.22, right? And then it dropped down to like around 6.5, which I am right now, right? But then the lender already also gave me an optional buy down point, which is like let's say if I buy down like another 0.5%, it costs me like 2 point, which is like 2% of the loan. So for my example, it's like $10,000, right? So if I use that, so I'm going from a 7.75 down to like a 6% because I paid a $10,000 to buy down the point. Then the pro of it is, of course, I get a good interest rate, right? But then the con of it is, if the rate dropped down to 5%, it's a 6%, I have no reason to do refinance again because I already at 6%. So I'm paying upfront the 10,000 to buy down the point, but it removed my option or my ability to refinance again when the rate drop again. So that's the reason why I never do a buy down. And so whenever you thinking about doing a refinance, make sure that you talk to your loan officer, do all the calculation and see if it's worth it or not. You can go through like Google, look it up, like let's say something like this, like a mortgage calculator, and do a rough estimate yourself, and you can see, oh, are you saving or not? Going from a 7.75 to, like, let's say a 7% or a 7.25%. Is it worth it with the $20,000 charges on the lender side? Is it worth it? As you can see, for if the rate is like going down by only to 7.25, my monthly mortgage is not, it doesn't even change that much. And that's the reason why, oh, this is not a good time to refinance when the rate only, like, went by half a point, right? So you're basically paying the same thing, but you already paid like the first month of interest already. So adding this to the first month of interest, it's still the same. So make sure you calculate all the numbers, and then and before that, before you do a refinance. And of course, if you guys have any question, or are thinking about doing a refinance and you want to look at the numbers, just drop me a comment and I can help you out. I can do a one-on-one video and then show you if it's worth it for you to do a refinance or not. Like, on when is a good time for you to do a refinance. Okay. Anyway, thank you for watching my video, and please help me improve my viewership by like and subscribe to my channel, so that YouTube can kind of recommend it to more people that have need want to learn more about real estate, or anything that would relate to real estate. Okay. Thank you. Goodbye.